Let's have a quick check on Bitcoin because, of course, it got to highs above $64,000, then came down pretty sharply, closer to 53 right now, although it is rallying a bit today, up around 7%. Okay, our guest, and of course one bullish factor here is that JP Morgan is preparing to let certain clients invest in a Bitcoin fund as early as this summer. Our guest has been tracking the cryptocurrency closely. We're joined by Michael Bucella, partner at BlockTower Capital. Michael, thanks very much for coming on the show. Just give us your take on why Bitcoin has come off its record highs.
Yeah, sure. So a lot of the more recent rally was driven through levered trading. And so typically when you see less of a spot bid in the market and more levered retail trading, particularly in the Asia region, that's a little bit less of a sustainable rally. And so I think anyone that was looking at market data noted that really kind of mid-March. And so there's been a bit less of an implicit bid for the market since then. And now we've seen that come back in. So the Biden administration tax proposal certainly had a bit of a pin in the broader capital markets, equities included. Crypto kind of traded alongside that. And most of those headline risks are generally bid by institutions. And we've seen that come about in the last 24 hours.
Sorry, most of those headline risks, what attitude do the institutional investors take?
Yeah, so most of those types of headline risks, which are not really firm systemic risks, they're typically reversed fairly quickly. So there's a bit of what we call FUD. The FUD kind of wipes out a lot of leverage in the system. Once that leverage is cleaned out of the system, you see a spot bid, and that typically comes from institutions buying through the likes of Coinbase and Fidelity in the Western Hemisphere versus the more levered buyers in the retail markets in Asia.
And you're in the camp that says the movement, the decisive movement of institutions and more conservative money into crypto is a game changer.
Yeah, I mean, it changes the whole market structure, right? We never had institutional bid in this market before really the end of last year. That seems like the bid going forward. The majority of the pipeline in terms of demand and interest is coming from institutions. And it's not an opinion, it's a fact. And, I think we'll see that, this evening, we'll see Tesla report earnings. They will likely announce, they'll just discuss cryptocurrencies and their Bitcoin holdings. You'll see Morgan Stanley later this week, who will report, and David Solomon at Goldman Sachs 2 weeks ago discussed cryptocurrencies in his prepared remarks. I assume Morgan Stanley will do as well. We had JP Morgan come about today. And so that train has kind of left the station. Again, it's less opinion than fact these days, and I think that'll continue as we move forward.
Now, we get these blue chip US players such as JP Morgan, Morgan Stanley, Goldman Sachs, either planning to or considering Bitcoin funds of various sorts. Is that a big factor?
It's huge. I think it's representative. It's an anecdote that represents the broader adoption, right? So you've got the large major investment banks that are going to be allowing their clients to invest in Bitcoin. You have, banks, regulated banks in the US who are actually lending cash using Bitcoin as a collateral, which is a very, very big market structure change, which effectively allows people to finance working capital with Bitcoin holdings. So it reduces the need to sell Bitcoin in the market. You have large institutions like Tesla, who's announcing tonight, that are holding Bitcoin and crypto assets more broadly. And so, yeah, I mean, there's a huge bid in the market that will be sustained as they allocate over the next 12, 24, 36 months. And that will always be there. That will always be persistent amongst the market data and market volatility of the cryptocurrency space. You're going to have hyper volatility just because in any market that is in kind of its earliest phases of development and I think new entrants are coming in, you get this increased leverage, which increases volatility, and 5% moves become 20% moves because of market structure.
So BlockTower, you're a crypto and blockchain investment firm. We'll have to have you back to talk about blockchain because to me, blockchain's even more fascinating than cryptocurrencies. But why? We know speculators buy Bitcoin. We know some people buy it as a reserve asset because they think it'll zag when other things zig. It'll go in a different direction, diversification. But why are institutions getting involved in Bitcoin and other cryptos?
So a few different reasons. And I could say March of 2020 pulled forward a decade of demand for this type of asset. And with the death of one asset comes the birth of another. And so whether you think it's fiat debasement or the fixed income markets more broadly that are going through systemic changes, it allowed something like Bitcoin to take the place of that. And so there's an infinite amount of capital searching for a home in an asset, and this is the hardest of hard assets, and it's 21 million supply in Bitcoin. And then if you think about cryptocurrencies more broadly, you've got three different pillars. You have Bitcoin as a macro asset, decentralized finance as a new evolution of the incumbent financial infrastructure, and then you have the consumer-facing side of NFTs and gaming and social tokens, things like NBA Top Shots, where most people collecting these things have no clue they're interacting with a cryptocurrency or a blockchain. And so it obfuscates the whole process while bringing many, many people into the space.
What about governments, though? Governments are going to jealously guard the privilege of creating currency, aren't they? Will they try to stem the growth of cryptos?
So they can regulate the platforms. They cannot regulate the assets. That's the beauty of decentralized assets. Although that being said, I would imagine, at least in the U.S., where the CFPB, the Consumer Financial Protection Bureau, probably had a few discussions with the SEC before they allowed a $100 billion company go public in Coinbase. I'd imagine at this point, the train has left the station yet again in terms of regulation being negatively impactful to crypto. So the new head of the SEC, Gary Gensler, he taught a 24-course Bitcoin class at MIT. He's clearly understands the technology, understands the asset. We think he's firmly a bull, and that will lead towards increased regulatory clarity, which will lead to further adoption. So things like an ETF, things like tax disclosures and tax language. Really just the ability for many of the incumbent industries and ecosystem to participate in the space without having to fear regulatory overhaul.
I'd like to end on an impossible question. Michael, where do you see Bitcoin ending the year in terms of price? Could you hazard any kind of a prediction? I know that's very, very risky.
It is, and it's kind of silly to we look at market data on a minute by minute basis. I can tell you that I would not be surprised if we ended the year with Bitcoin through 100,000.
Okay. Yeah, and I wouldn't press you any further because it's such an impossible task to predict any asset price.
Everywhere, do your own work.
Certainly that far.
Yeah. So do your work, Michael, risk what you're willing to lose, and that's my disclosure for the segment.